going back to what's working right now, this is amazing to me. And like, I think you and I have called it. We have been pretty bullish on gold. If you look at our, let's see, inflation protection and the income builder portfolios, we've talked a lot about gold there because we've seen this as an investment that's worth having kind of in good times and bad, right? So this is the shocking news. We were looking at this and we were both like, oh my gosh, like who knew? All you had to do was buy gold for the last 20 years and you beat in the S&P. Wow, like as of yesterday, that's amazing. So gold is outperforming the S&P over 20 years. That's an incredible chart, just an incredible chart. And it makes me even happier about my gold. Like sometimes like people say, oh, don't buy gold, don't buy gold. What does it really mean? And that's a fair question, right? In fact, I think we just got something from a viewer, not just a viewer. Actually, this is somebody who is a subscriber to our research, and I want to share this with you guys. I'm not giving his name away, so I don't think he'll be too upset, but he had a really, really, really good question, Rob, and I think it's worth taking a look at. He writes, hey there, dynamic duo. My question is, what is so special about gold? You can't use it to buy something at the store and get change if you use it. And so you have gold. How are you going to use it? Like, how are you going to get money from it to buy stuff? And how hard or easy is it to get money from gold to spend it? Why not just buy king stocks, right? Lots of stocks that get you quarterly dividends. And from that, you're going to be super safe because you've got actual stocks. You don't have to worry about whether or not they drop in price. You get the dividend, no problem. And by the way, we do like that, and we do like dividend stocks. I should point out that in our income builder portfolio, we do have that's a big part of why we created that, as well as inflation protection, because I told you, right? Like I want to make sure we have some dividend stocks in there so that people get paid when things are going down. But back to the question about whether or not it's really worth having gold, and you look at this chart of how it's outpaced the S&P, you can understand people are like, but really why? Like, what is that? And why does that represent value? I mean, it's represented value for thousands of years, of course. Philosophical question that we can discuss.
Yeah, no, and these are debates that, I've always encountered on Wall Street, because you do get a certain type of investor who just really doesn't like gold and looks at it and says, what is it? It's just a stupid a bar of shiny metal. Like, what's the point? Why does it have value? And smart people sort of feel this way too. Warren Buffett among them, very skeptical of gold. I think, but then you get other investors who completely get it and have an appreciation for it. So I think that the starting point is to really understand that gold does not have value because of its utility and some sort of industrial function. Gold has value because it's money, because of its utility as money, as capital. And the fact that it's not, the reason it's not useful in a lot of things is that it's a very inert, stable metal and a very scarce and unavailable metal. But those properties are what really make it useful as money. And that's why for thousands and thousands of years, it has served as money. So in the current context, you've got a lot of central banks accumulating gold, particularly in emerging markets, making it their core reserve asset, moving away from U.S. treasuries and, the printed money of the U.S. federal government. And that accumulation is really what has driven the price of gold up relative to fiat currencies.
Now, that brings us to an interesting discussion, if you would. So if you think about gold outperforming the S&P over 20 years, what does that mean, right, for the next 20 years? And what does it mean in terms of the U.S. holding that position? Don Bacco, good to see you over here. He's laughing about that, he used to be a trader, and you're at the CBOE, right? So Don is making the comment in our chat here that one of the first things he learned, of course, is that investors are always fearful and tend to act like sheep, right? So you want to try and avoid doing exactly what the retail investor is doing all the time. Good point, Don. But back to gold outperforming here. So if gold is outperforming and maybe continues to outperform, I think that actually speaks to something else, which is that there's this realignment, if you would, globally, where I think a lot of emerging market countries are like, ooh, like I don't want to be so dependent on U.S. Treasuries, in part because of some of the things, frankly, that Biden did, right? Where he cut off Russia and they couldn't get access to any of their dollars because they had invested in U.S. Treasuries. So if you're Russia, like, why would you ever want to invest in U.S. Treasuries? If you're anyone, like, why would you want to invest in Treasuries if you're at risk of ticking off the USA and therefore not having access to your money? And I think that that's sort of like, if you're going to be the sort of dominant financial power in the world and you want everybody buying your treasuries, you're going to have to realize that you can't so easily cut them off, at least nowadays, when they have access to gold and frankly, Bitcoin as well.
Yes. And, the beauty of gold, the really neat thing about gold is that, you buy, if you're a central bank in India, China, wherever you are, you buy Turkey, you buy gold, you bring it into your country, you put it in your vault, it's yours. You're not relying on some third party or some, Western bank to give you permission to own your asset, or, when they decide to freeze it or seize it or give it to Ukraine, in Russia's case, give it to Ukraine to buy weapons to be used against you. So gold it's a non-sovereign asset, and it's unique among all the potential reserve assets out there. And it can't be printed. It can be mined, and the supply growth is 1% to 2% a year, but there's physical limitations on as to how much mining can occur. But it can't just be printed by the European Central Bank or the Fed. So you just have this kind of migration towards gold as a preferred asset. And Bitcoin, you mentioned, it's serving a similar function, but rather than in the physical realm, in the digital realm. But it's not there yet in terms of central banks and sort of it's a sub $2 trillion market cap now on Bitcoin. Gold's more like 20 trillion. Right. So gold's a more established form of money for purposes of central banks, but I think the Bitcoin story really is, over time, this is the digital version of a decentralized, non-sovereign, form of money, a form of capital.
It's really incredible how well it's done. And it's incredible to me how many people on Wall Street resist it. I don't think you'll ever meet a money manager who's like, oh yeah, go buy gold. And I'm not entirely, is that just industry bias and the fact that maybe you don't get something as a money manager? I don't know. I mean, like I've sort of struggled to understand why they're so resistant to it, especially now with a statistic like this. I mean, it just seems like in a diversified portfolio, this would be one of the things that you would want to hold.
Yeah, and gold's up 17% or 18% year to date, while the S&P is down 5%. So that really puts in perspective how nice it is as a hedge within a portfolio. You don't have to have half your portfolio in gold, right? You can have a low percentage of your portfolio in gold, but it's definitely a nice complement. I think in terms of Wall Street, it doesn't really make money off of gold. It makes a lot of money off of stocks, and we love stocks, and stocks are probably where most people should have most of their assets. But there's not really a lot of incentive within the system to, there are some there are some companies and products that are in the gold space, but to really encourage gold.
One of the things that I wonder and sort of question is whether or not, well, I guess I don't, because I just like gold no matter what. And I look at it right now and I'm like, anytime it's like going below 3,000, or even like 2,800, I think that was my latest one. It was below 2,800. Those days have kind of come and gone now. It's moving up considerably. You have Goldman Sachs now, Rob, saying they're putting a price target of 3,300. I don't know what the answer is. I wouldn't be surprised to see that. I wouldn't be surprised to see it actually be more by year end. And so, again, I'm not looking to get in and out of my gold, but I am watching it as a percentage of my portfolio, because obviously with this increase, right, it takes on a larger and larger role. Do you, like me, see that this is going to continue to move forward over the next year or over the next 12 months? I mean, it's still an asset class I know the answer to this, but I'm asking for the viewer.
Well, look,
Don,
I mean, I
Don
think,
is joking. He's like, Trish loves gold. Yeah, there's a website, trishlovesgold.com, for a sponsor on my other show. But yeah, I mean, I think it's one of those asset classes that you're smart to be in. Period.
yeah, the long-term direction of gold is up, right? Because the long-term direction of, fiat money printing is up. And now there is the risk, and certainly we saw it in 2011. The gold price doesn't just go up. The gold price can go down, and in 2011 it went down pretty sharply after a huge rally. So there is the risk that gold could become overextended. I still think we're sort of moving in a direction where gold is becoming just of having more value relative to the world's fiat currencies, and the central banks are kind of repricing it. When you think of the tariff dynamic now, and this is sort of feeding into the gold momentum, what happens in a tariff dynamic is that everyone's monetary policy tends to become a little easier because, for these foreign countries to overcome the tariff, they
You
need
want
to
to make
kind of
your products cheaper.
yeah, they debase their own currencies.
Relatively
They have
cheaper.
easier monetary policy, but then the U.S. in turn has to kind of control its exchange rates, and it starts to get more inclined to debase its, to print. So, if you're in a dynamic of a lot of monetary creation, that's where gold really kind of has sustained upside.
Yeah, it's again, it's one of those things that I like in a diversified portfolio, period. But given everything that's happening right now and all the tariff talk, I think there's all the more reason for these central banks all over the world to want to own it. And it's one of the reasons why if you look at inflation protection or income builder in our portfolios at 76 Research, we have included it, and a smart thing to do.